Hello and welcome to the Wednesday check-in brought to you by David Gockstein. I'm your host, Landy, and today is June 24th, 2026, and we're looking at Bitcoin here on the daily. And we did meet the criteria to test the downside area of the range right around the lows and even got a little bit of a sweep of the actual low, but no close below. You might remember that on, it would have been Monday. So on the Monday candle, I mentioned that when looking at the levels, anywhere below, $62,500, and specifically below that we'd be testing this low over here, which was a higher low. Now, Monday to the Wednesday candle, not only did we test this higher low, but getting below $62,500, I pretty much said, we're essentially looking right to this 61.5 area, and anywhere below there, I'd be looking for a sweep of the lows, and we actually got that. But you'll notice green arrow, red arrow is indicating where we would see, a resolution to this compression here on the daily time frame. So basically above the most recent rejected highs, just shy of $68,000, coming in at 67,260. We'd be looking at, $68,000 is kind of what I'm looking for, and that would resolve the compression to the upside, but we would need to see closes above there. And to the downside, closes below the low, essentially, with a swing zone kind of being between like 58 to 60. Don't really want to see closes below 60, but, what would definitely kick off expansion to the downside would be closes below the $59,000 low, and we got a sweep of it today. So that is not too unexpected. Now we're starting to see that this compression is turning into a compressive range. So the criteria just becomes that much more clear. Lower term time frame bounces, great. That's good. Hold the range. What do you need to see the bulls do? You need to see the bulls take control of 62.5, break the lower term time frame downtrend, specifically on a 4-hour. We'll jump over there. Reclaiming 62.5 means that we should be looking right to the actual lower high right here inside of the 62.5 to 65K zone, right around 63,160 or so. Need to see a close above there. And then we're back right in the thick of that main zone. And essentially, we evaluate where after a trend break, if we get a higher low, as this is, of course, a downtrending structure. In this case, I'd be looking for, I'd want to see a recovery above 62.5, especially on daily closes. Nice dip in for liquidity here. Had a 4-hour close, like right on the $60,000 here. Nice dip down for liquidity. Then a move back up. 61.5, where the 4-hour lower for standard deviation is the actual close open low from the rundown over here into this zone for 59K. And realistically, what we're looking for here is, if Bitcoin is going to avoid, testing further down into this zone, which is fine as long as it doesn't break down on, longer term time frames. It can even swing outside of it and come back in as long as it's closing back above around $60,000. Probably looking okay, might bounce out. But from here, what the bulls want to see is a recovery above 62.5, take out the lower high structure, right? To prevent, further potential downside, or get a lower high that's a little bit closer, hold the lows, and then try to take out a lower high that's a little bit more appealing down here. But for right now, 62.5, take out 63,160, and then, this zone opens back up to the upside, right? We would want to see something like, higher low structure develop after a trend break. But if it is going to become a bullish structure, you'd want to see something like this. And then even if it comes back down this is just an example, as long as it's holding this low down here, but essentially higher low and then try up for higher. perfectly fine. It can even go up higher than that, right? But as long as it gets a trend break and then gets higher low structure, then sure, we can start looking back towards 65. So eyes on right around here where the daily low is at 61.5 is what I'm going to be paying attention to essentially here. And that's going to be, this close open structure to this close open structure here. So 60,800 or so, 700 to 800 where these swings are is, what Bitcoin essentially closed below. It did not close below the 60,800. It actually is testing that right now, but it closed slightly above it at 61K. And then we've got 61.5 here or so. Then above there, we can start, entertaining trips to 62 to 62.5 in the lower term timeframes. Any recovery above there, watch for something like a 4-hour trend break. But even then, you don't want a deviation of trend. You want to see higher lows or equal lows from there. As far as I can tell at this particular moment, until we see that, this is very downside angled, at minimum back in towards, 58 to 60 or so. And daily closes below the actual low is what you need to pay attention to. Essentially losing this zone, then we're looking, 54 to 56 or so at the top side of this weekly area down here, and then that opens up, of course, the bottom side 52.5 to 53.5. Or you can just call it, 54 to 56 and 52 to 54 if you want. And then eventually, if it were to continue getting expansion down below there, 48 to 50. And in this case, I would be paying very close attention to this area for the next few days and seeing if Bitcoin can hold up here. And don't be surprised. I would not be surprised also if we went back down on this move and did a straight up sweep under, and not even hit some of the main weeklies down there, sweep under and then try up. It's just watch where price kind of is headed over the course of today, the rest of Wednesday, Thursday session into Friday, essentially. It's still Wednesday for me, but Thursday, watch the Thursday session as we head into Friday session. So there's not too much else to say, right? Back above this high here, we have a chance to test, 68 to potentially 70. Any closes above, the $68,000 here. Be aware of swing fails in and around 68 to 69. Otherwise, I would be looking up to around 70 to 72. The compression is not resolved yet. We just got, the first move to grab some liquidity from the lows, got a nice little bounce out of there, and we'll see if anything materially changes in the coming hours here for Bitcoin. One of the things you'll notice if you go to lower term timeframes, very, very much still in motion to the downside here on expansion. Be aware of any kind of runs of 58 into the 57 to 58 region around the lower third here, and then pop right back up in and especially recover above 60K. I would be aware of that potential, but if it does go for the full Monty down, 54 to 56 is the next big area. Before, the straight up, mid to low 50s and potentially even upper 40s to 50K. So nothing too crazy there. And this is going to be the big battle here. If we do see Bitcoin come back up, even on the hourly, you can see 62.5 is where the upper first is. And just above 63, 160 or so, there is an area of interest here by the upper second. It was, this structure before heading up and getting above 61 or 65K. But this entire area is resistance until proven otherwise. So even if Bitcoin does reclaim this zone and go for a trend break, we would still need to see, structure on the hourly 4-hour, remain uptrending. At least on the 4-hour, start trying to trend break and then put in a higher low and then head for 65 and then try to close above it. And that's not out of the question, actually, when you see a compression like this. Is a compressive range doesn't it doesn't always get resolved very quickly, although sometimes it does. That's why you just have to be aware of the lows. If they're dropped, it's expansion, right? Doesn't mean that it can't reverse and try back in and just run the other side, but just be aware of close over close price expansion to the downside. That's where we'd be looking for those, mid $50,000 price targets. But the actual, the rubber usually doesn't hit the road first pass. Sometimes it does. If we look at some of the prior compressions, we get a little bit of a sweep in, a little bit of a tag of overhead resistance, and then a break, and then down through the levels. So that's not really the biggest compression that we've seen. Typically you see, expansion into resistance over here, hold support, and then go for a nice sweep into the monthly and weekly area at 98 over there. So, we've seen how compressions can kind of trend down and then reverse right back through. And honestly, I am of the opinion, and this is my opinion based on some analysis of fundamentals in terms of open interest, positioning for some of the perps and futures contracts, that if we do go for the downside area, especially around the 54 to 56 down here, you call the happy medium at 55,000, right? Or we go for the weeklies down here, I would not be surprised to see a bigger bounce back up that then tries to take liquidity from all the way up here. So doesn't necessarily have to just die and roll over. It could potentially grab the liquidity down here and then head right back up and try to grab liquidity on the top side. Right now, we got some nice fuel from some late shorts that were literally shorting support right here that led to the bounce in the daily. But longs are starting to pile in. Let's actually go and check where open interest is. Longs definitely piling in. Let's see if it's not anything too crazy right now. Let's see where we are. 2.129. Not, we had a lot of longs get taken out, and then some late shorts got smacked on the run back to 61K, but that's late shorts always getting smacked, late longs always getting smacked. We are seeing some negative funding here, so let's see what open interest is down here. So we had on the low side right around 20.12 billion. And then open interest got all the way up to 21.5 billion. So, if we go for the downside first, I don't think we're going to leave that liquidity for long. At minimum, 62.5 to 65, and probably you would need to go above 65 to grab some of the bigger orders and wipe some of those shorts that might still be hanging on up there, or trying to short it on the way up. I'm not liking the look of it right now for an immediate breakdown, but I would definitely be watching it. The move is still in motion on the 4 hour. This is expansion into support, and it's still got some juice, which you'd want to see if you're bullish on this low area. For now, is you really want to see this, even if it just comes and hangs down around the low side, don't break below, or break very quickly below into like the 57 to 58, and then come right back in and start closing back above 60, and then try to mean revert back into compression and get an expansion up into 62.5 to 65. Otherwise, mean revert, try to change trend and get the compression off of a higher low and come back in. So essentially, looking at something like the preferred path, and I will say that this would be like the preferred path for the bulls, would be something like that. Get some distance away from the low, come in, break the trend, or try to break the trend, even if it ends up in a lower high, higher low. And then trend reversal setup. This would be a like a lower high, higher low trend reversal setup to then trend break, or go for the trend break to trend reversal setup. That's what the bulls want to see. Otherwise, the move is still in motion, and you have to be aware of the low side zone and see if we drop it. So, this is the exciting times. Now, one of the big reasons why I brought this up prior is because the daily lower second standard deviation to lower third, bracketing the bottom side of the zone. If it's dropped, that's expansion into support, especially on close over close breakdown. And that's also right where the lower second is on the weekly, which would open up the mid to low 50s for the weekly where the lower third is. So that's my main point behind all of that. So now it's just eyes on and pay attention. If we go for the downside first, I'm probably going to be hunting at least some lower term time frame longs, and I'll probably hit some more spot orders on the way down. Even if I'm looking for prolonged expansion down further, that's okay. I've said this over and over again. 60K and under, this is accumulation. I joked around about this with Bits, and I've joked around about it here, but he made me crack up one day when he was like, "Oh, look at what I found on the chart. Like, it's literally a 1-to-1. It's either going to zero or going back to the all-time high." And it's such a good way of illustrating kind of what many traders and people who've been here for a long time, who are also in the game for a long time, to accumulate during the bear period, is like, yeah, here and lower is opportunity, right? It's all discount, and there's I don't think there's very many people that, at least if you're watching this, believe that it's going to zero. So that's these are the time periods that you want to be accumulating, especially if it starts to head down, and get that weekly, that daily into weekly expansion to the downside into the next zones of interest, and kind of go from there. Let's go ahead and check on oil, and we'll see that we did breach into this gap in my chart here. But essentially, I've been talking about 68 to 72 as a zone to pay attention to. Well, keep paying attention. One of the things that you don't want to see right now with strong Dixie is a strong bounce in oil that reclaims above 80 right now and starts heading towards the 80, 84 to 80, 86 area around the basis on the daily. That's going to further cause a risk-off rotation in traditional markets. So, we did get a nice bounce in markets after a little downside wick action here. It's really all about getting below the low around 720 for SPY, and then and on the other side of that, in the lower term timeframes above 750, start looking for 765 or 756 rather. I read that backwards. Sorry. And then go for 765. But this is starting to line up to be, very similar in look to what we have seen, in some of the starts of the consolidation ranges. So, I compared it to, I think it was this lower low, lower high, and then a little bit of a chop around, then, break that lower high, higher low, and then higher high, back for the correction, lower high, right back to the lows, and then start chopping around, really compressing. And that's something we could see. But if we do start to see oil strengthen, while Dixie is up at an area of interest around 101 to 102, if we see oil strengthen, Dixie could very well go for 103, and that's where we could see a potential breakdown of the 720 area here. We already kind of had our gap fill there, so if we break down from it, we're going in probably for the entire move back to 695 to 700, and maybe even more down to 680 or something. Not my initial takeoff of this right this very moment, but we'll watch to see if those conditions are met. And that's pretty much it for today. This is, of course, just a Wednesday check-in. I will have a live stream at 8 p.m. Eastern on Friday. I'm not sure who the guests are going to be just yet. I'm going to try and nail that down tomorrow, or today, tonight, into tomorrow. And then I'll have a live stream for you, hopefully with some guests on Friday at 8 p.m. Eastern, 5 p.m. Pacific Standard Time. I hope that you all have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that said, Landy out. Take care.